Hi, everyone. My name is Maya with Accolade Accounting, and we wanted to thank you all for taking the time to attend the COVID-19 Relief 2.0 webinar. Our speaker today is the CPA and founder of Accolade Accounting, who has over 10 years of experience helping clients navigate through their taxes, the IRS, and a variety of types of financial business activities. He uses his financial wisdom to give peace of mind to small businesses and individuals. So without further delay, I am pleased to present to you JB Ramsey.
Thank you for that introduction. I really appreciate that. Today, as Maya mentioned, we're going to be going over a lot of the items that have changed in the most recent tax bill that came out just at the end of last year. As you can see, it was on December 27th of 2020 that President Trump signed the Consolidated Appropriations Act of 2021, and it provided the fourth round of COVID relief funding for businesses and individuals. Today, we're going to spend a lot more time covering the business provisions. There's a whole set of individual provisions, including the stimulus and things there that if we have time, we can touch on, but more than likely that will be reserved for another date. But the biggest thing is that this act, it expanded on the relief provided by the CARES Act earlier in 2020 and really expanded on the ways that we're able to take advantage of that. One of the first ways was through the Paycheck Protection Program. A lot of people are very familiar with this program because this program came out in last year with the CARES Act. This time, though, the program was revitalized with an injection of an additional $284 billion. Now, that sounds like a lot of money, and it really is. But just keep in mind, this is about half as much as was allocated for this program last time, right? So what we're seeing is that we're expecting a lot of this to go very, very quickly and these funds to move fast. So the people who are prepared and best understand how to apply and go through this process will definitely come out on top of this, right? So COVIDTRA specifically set aside $35 billion in new loans for first-time applicants. The thing that makes the PPP so attractive is that we still have these very favorable interest rates. We have a 5-year maturity date on the loan once it's gotten, deferred loan payments. And if you spend the funds on certain categories, which they've expanded for us and they've added more for us, if you spend the loans on those certain categories, you can qualify for forgiveness, right? And this loan doesn't have to be paid back. Now, with that $35 billion that they set aside for first-time borrowers, this unique program reopened it back up, and it made it even more flexible. So people who did not apply for the PPP the first time before the program closed on August 8th are now eligible to apply for the PPP as a first-time borrower and get these funds. They've revitalized this program and made it much more attractive because now you can still get up to about $10 million in the loans, and you don't have to worry about that reduction in revenue when it comes to getting this. Eligible first draw borrowers were in operation on February 15th, 2020. That is the key date. There's a lot of things that we can do when it comes to calculating payroll costs and applicability for these programs. But the biggest thing is that you have to be in business on February 15th, 2020 and be able to prove it, right? It's helpful if you have tax returns or other business registrations or business activities showing that you were open at that time. But also with the first one, it still applies 500 fewer employees. They've reopened it now to additional companies such as 501c6s, chambers of commerce. So previously they weren't allowed to get this, but now they are. So it's more expensive for those nonprofits. still is eligible for the self-employed and independent contractors and certain new organizations. There's this particular focus on accommodations and food service industry, industry type companies, specifically the ones that have the NAICS beginning with the 72, and that's that North American Industry Classification System that identifies what kind of business that you have. And they're specifically targeting these, and in the second one, right, because throughout COVID, they were hit particularly hard when it all came down, and their businesses have suffered continued losses over that period of time, and even into now. With this second application, the program actually reopened on January 11th, right? And the second one opened on January 13th. Now, a lot of banks are still getting in the process of preparing to accept these applications, mostly because it was that Friday that a lot of this stuff came out, or the Friday that they were supposed to start accepting applications is when a lot of these rules came out. And the December 27th law initially charged them with putting out these rules within 10 days. And as it so happens, that 10-day deadline, which they ended up meeting, but very late in the day, happened on January 6th. And I don't know if you guys saw or anything, but there were quite a few things going on in the country on January 6th, but they ended up getting that out anyway and out to us. So we have that guidance to kind of lean on here. So one of the other great things about the first draw is if you applied the first time and you didn't get enough funding, or for some reason you took less funding, right? This first draw reopens it so that you can go back and get more funding. And so it's not technically open for everyone to do that. What you really want to do is, or the people that it really applies to are your general partnerships. That was a lot of confusion around general partnerships and how those would apply for the PPP when it initially came out. These general partnerships, they had employees, and they would typically apply for the PPP for them, and it would only cover the employee payroll. And they were very confused, especially on the self-employment portion of the general partnerships, on how that would apply to getting the PPP and including that into your income for that application. Well, the SBA released an interim final rule which clarified that, and they said that if you were a partnership and you had self-employment income, that self-employment income could be included in those payroll costs to then calculate your higher loan balance. Well, by the time that they released that interim final rule, we found that most people had already applied for the PPP and gotten those funds, and banks were very uninterested in going back and redoing it, especially because they didn't know how the SBA would react to that. So a lot of those people ended up being denied, or just not being able to go back for that second, for that increase for the funds that they were entitled to. So this first draw that they've done, it reopens that and allows people to go in and enjoy that and get that higher amount. So, and continuing on, right? So with this first draw, they've set aside $15 billion for certain categories of borrowers, right? And those borrowers with 10 or fewer employees, loan amounts of $250,000 or less, or borrowers in low or moderate income neighborhoods. So if you fall into one of those categories, right, you are pretty much getting pushed to the head of the line, right? They're gonna target those people first, and the application is actually open to borrowers, qualifying borrowers that fall into those categories first. This is mostly to address the fact that previously, when the PPP first came out, it was mostly the people that were very connected with accountants or that spoke bank, right? And those were the ones that were able to get their loans very, very quickly, because the banks were they had larger loans. The fees obviously were a little bit more attractive there, and it was just easier to get that information from them. So what they've done here is they're setting this aside to make it easier for the smaller guys or the more disadvantaged guys to be able to take advantage of those funds. So definitely jump into that. And for the first 2 days of the program, they're actually only offering loans to these groups of people. So, I mean, we are beyond that now, but again, that is specifically set aside for these type of applicants, right? So it's a little bit easier to make sure that everybody is able to take advantage of that. Existing borrowers that have not received forgiveness or have returned a portion of their loan. That was another item, was that we saw that people who took loans, right, and at first they had to certify that these loans, that they actually had an economic need for these loans, right? We had an attestation that you had an economic need for these loans. And so a lot of companies ended up also turning that around, right, in giving those funds back because they didn't understand what that meant, and it was very unclear. But if you fall into those categories where you didn't draw enough or you gave the money back, you can now go back for the first draw to increase that. The applications for the first draw, this is a very, very quick program, right? It's a first quarter kind of thing. We have to get on this immediately, right? And so that's why it's so important to have your records and really just be attentive to these moves as they're coming out and have those relationships with your bank. The PPP also created a second draw program. Now, in this second draw program, you can get loans of up to 2 million, right? See, the first one was up to 10 million, but the second one we can only go up to 2 million, right? What's different here, a lot of the items are the same. And what's very interesting is that the SBA in the interim final rules, in the first PPP that came out last year, they were issuing all these rules that sometimes would just modify small things. And as we went along, they combined all of those into one IFR for the first PPP, and then created this one for the second, another interim final rule for the second draw, and said, hey, everything that applies to the first applies to the second. And what we're doing here is that we're going to add on to it, right? We're going to add on a couple of additional provisions. So with this, hotels and restaurants, right? Those NAICS with the 7.2 on the beginning, they are eligible for 3.5 times their average monthly payroll. So the SBA is really looking out for them in this one. Not in the first one. They're not entitled to that in the first one, but they are entitled to that in the second one. And what you'll notice is the way that it's calculated, right? It's incurred in the 1 year period prior to the date of the loan. That's the actual wording of the interim final rule from the SBA, is the 1 year period prior to the date of the loan. But what they have also clarified, actually just as recently as Friday, right? And so this information is still coming out and being presented to us. But what they've recently clarified is that it doesn't have to be just the 1 year period prior to the date of the loan, right? What we can use, since that can inevitably end up with you having split or awkward payroll reports, and you've got to run these additional documents that, you know, maybe people don't quite understand. What they've done is they said, hey, you know what? We're gonna forget that part. So hotels and restaurants, 3.5. All other borrowers up to 2.5 times, right? And for each of those, you can use either your 2019 payroll, your 2020, or the 1 year prior to the date of the loan, right? So that increased flexibility makes the second draw incredibly attractive. Here, our eligible borrowers are changing a little bit, right? They're narrowing this down for the groups that can get this. 300 fewer employers. And you have to have received the first draw loan, and you don't have to apply for it. You don't have to have used the full amount, but you will have to attest that you will use the full amount of the loan for authorized purposes by the disbursement date of the second loan, right? So no going out there buying Lamborghinis with your first one and then coming back to the trop again for a second amount, right? That's just not going to work out. You do have to Now with this one, right, the first one, it was just more or less we have to demonstrate or say we had that economic need because we were affected by coronavirus. Now with this one, we're going to, at least in the application, we have to attest to that need or that need, which is the 25% reduction in revenue between comparable quarters in 2019 and 2020. Now, what's um what's going to happen there is we do have multiple ways of doing this. The SBA has also recently come out and added some flexibility to that piece, right? Because what they're finding is a lot of these small taxpayers don't have uh, may not have their tax records completely ready yet, right? They don't have everything ready, or maybe they don't have books. So they're accepting two forms of this. One form is going to be obviously the tax returns, right? We can compare the tax returns to your 2019 tax return with your 2020 tax return if you have that prepared. Overall, what they're looking for, and this is for the forgiveness portion. Remember, for the application, you just have to attest that you've had that and that you have a need. When it comes to forgiveness, you actually have to prove that 25% reduction. So we have you can use either your tax returns, and the idea is if your 2020 shows a 25% decrease over your 2019, well then of course at least at some point in there you've had a quarter that shows that amount also, right? For those people that have financial statements, that's a much better way to go. If we can pull a quarter and compare that, it makes it much easier, but you don't need that to apply. Now, as with the first loan, I expect this second loan to be slightly similar in the way that when you do apply, depending on where you apply at, and these different banks, they will have different procedures and different documents that they're going to ask of you. That's just going to be fact, right? And but according to the law, that is what it is. You just have to make the attestation on the front end, and then you use the actual documents on the back end for forgiveness if you're going for forgiveness, right? Because sometimes we may not if we need to use the funds otherwise. Again, for the second draw, we're carving out some funds. 25 billion for borrowers in those same categories: 10 employees or less, loans of $250,000 or less, in low or moderate income neighborhoods, right? And so you're just going to have to certify that to the bank as they're asking you for that. Once you do that, you can kind of move to the front of the line, right? Or at least you're dealing with a different pool of money there. Again, applications for the second draw PPP loan will be accepted until March 31st. So again, this is a first quarter thing. It is a get in there, get it, and use it to your advantage as you can. And most of these provisions that are in this law are targeted at the first, one or two quarters of the year, right? And it kind of gives you the government's thought, for what that is worth, of where they think we're going to be in the next 6 months, or where they think what they think is going to happen, right? Because if this doesn't work out, then we have to go back to the table again, and we have to negotiate a new package, and that's not usually what they want to do. So, eligible expenses. COVIDTR also expanded the eligible expenses that you can use now, right? When it comes to forgiveness, right? So previously with the first PPP loan, if you got the PPP loan at a certain time and you wanted to apply for forgiveness, you had to use the funds over either an 8-week period, depending on when you applied, or a 24-week period, depending on when you applied. What we've done here is we've clarified it so that now you can choose. You can choose whether you have an 8 or 24-week period, right? And these eligible expenses that I'm going through here and everything else, it applies to both loans, right? So they've expanded both loans in both programs. So now we can choose where we're going to use that payroll at, and that makes it a little bit more flexible, especially for our seasonal employers, right? The seasonal employers, and they have their own alternate covered period that they can use, and actually when you're even applying for it and providing your financials and showing that 25% drop, being a seasonal employer is a lot more flexible now, because they do allow you to choose even more flexibility the range that you're going to use there. But now we have the 8 or 24 week on qualified expenses, right? Employee compensation and additional benefits, including group term life, vision, dental, disability, group healthcare coverage, and contributions to retirement plans. Those are all fair game for payroll costs, right? And you want to get as many of these as possible to raise your average payroll cost as high as possible. That way you're eligible for the largest loan amount. So they've expanded the role of those payroll costs. The CARES Act also allowed additional expenses of mortgage interest, rent, and utilities. All of this stuff, look at that date, right? That date is the magic date. That is what everybody is paying attention to. That date, February 15th, 2020, right? We've got to be in business on that date. If we have contracts that we're looking to use to offset or to use some of these eligible expenses on, they've got to be essentially enforced on that date so we can carry those forward. COVIDTRA continued to expand the list of eligible expenses for us, right? And so what they added that you can use these funds on, right? Not just the rent, interest, utilities. Now you can use on covered supplier costs, right? And so just to clarify, those expenditures to suppliers, essential to operations, right? We also have covered operation expenditures, any business software, cloud computing software, right? As a lot of these companies figured out how to deal with coronavirus, they had to move online, right? And so now a lot of those expenses transferred from having a server in your office to now paying for a cloud server online, right? Or these different cloud computing operations. That's also allowed, right? Property damage and vandalism. So no secret, 2020 was a year of change, right? And so if you did suffer any property damage or vandalism to your property, or if your business was impacted by that, then you can use the funds for that, to the extent that insurance has not already reimbursed you or covered for those, right? And then covered worker protections. Again, this isn't going to have to do with these employers taking precautions for their employees, right? At least when I go to the grocery store, they've got these large plastic panels separating yourself from the cashier. They've got these stickers on the floor. They've got these signs everywhere telling everybody, hey, wear a mask. And maybe even they've had to change the way that they operate by including sanitizer stations or including certain breaks or items like that in the workday. Those expenditures are also covered, right? And anything, if it was required by the state, the federal, or your local government, all of that will qualify. Those expenses are eligible. Now, forgiveness, right? That's really the big thing here when it comes to all this stuff. When we get into forgiveness, they've really made it so that it's just a much friendlier affair, right? So the forgiveness for the loans of up to $150,000 is incredibly easy. It's like a one or two page document. You're almost guaranteed forgiveness if you use the expenses on those certain categories that we've spoken about earlier. And the PPP loans for $150,000 or less will be forgiven if the borrower submits that one-page certification describing the number of employees retained, the amount spent on payroll, and the total loan value. Now, the really interesting thing about this is that is a one-page certification, right? That's your attestation that you're presenting to the SBA. Now, you, according to the law and the IFRs, the interim final rules, that is not, they're just asking you that information for demographic information, for information that they can take back and say like, hey, this is who we've helped and this is what we've done, right? Especially when it comes to the simplified forgiveness. The thing that raises a lot of people's, eyebrows is that employees retain number, right? So a lot of this stuff, it's not going to affect your forgiveness. It's just, they just want to know, right? They just want to know and understand, how did this program help you? Who did you retain? And, how's your business outlook at this point? Um, you also have to attest that that one pager is accurate and that your application is accurate, and that you replied or complied with the program requirements. And then there's that requirement there is to retain the records for 4 years. Now, this has been an absolute craziness, right? It's been a feeding frenzy when it comes to these loans. So I encourage everyone, please keep these documents, keep them somewhere safe, because over the next few years, the SBA will be looking back and looking into this and asking certain questions. And it will make your life a million times easier if you can just check back and pull those documents as you need. The other part that's incredibly interesting here is the economic injury disaster loan no longer reduces your PPP forgiveness. Now, initially, people who got that loan, that you were eligible for a grant up to $10,000. It was essentially $1,000 per employee. And if you ended up getting the EIDL and the PPP, what would happen is on your PPP forgiveness application, they would forgive all but that last $10,000, right? And that last $10,000 would be a loan on the PPP at 1%. That was clearly not the intent of the program. So in this law on December 27th, they clarified that for us and removed that hurdle. So now the EIDL no longer contaminates the PPP. Now, if you have already applied for forgiveness and you're paying on that loan, so say you've got that $10,000 and the bank has required you to start paying on it, or if they're saying, hey, that promissory note is still out there, even though you're in deferment right now, you're going to eventually have to pay on that note. What's going to happen is the SBA at this point, this is their process. They're going to go back and contact that bank, right, on your behalf. And what you'll need to make sure all of this is happening, you need this SBA loan number. It's going to be on your promissory note document that you received from the SBA when you first signed up. Hold on to those, right? You will need that loan number. Essentially, the SBA is going to use that loan number to look up your account with that bank, and they will issue to them that $10,000, right, to cover that amount, or up to $10,000, whatever grant amount that you got that was not previously forgiven, and granted that you qualify for forgiveness. They'll issue that amount to the bank. If you've made any, they'll issue that amount plus interest. If you've made any payments on that loan, the bank is then due to return that amount to you plus interest and put that back into your pocket, making you whole. So that is a very, very interesting prospect here for the EIDL. Now, for loans greater than $150,000, right? We had that Promise Keepers proposal that promised also a simplified forgiveness for loans above $150,000, but that ended up not coming through in the final iteration of this bill. So it's a different process if you have over $150,000. There's a couple extra documents that you need to make sure you're turning in, and attestations. That a little bit more straightforward, because typically, at least the ones that I've seen that get up into that range, we have accounting systems that make it just much easier to pull that information and apply for that forgiveness. COVITRA also established that gross income does not include forgiveness of certain loans, grants, and repayment assistance as provided by the CARES Act. Now, that's particularly exciting. That was not included in the first iteration of the bill, right? Even though, again, that was Congress's intent. They didn't want to give you money and then make it taxable to you. So they had to go back and clarify that. The IRS initially took a different position on it. And it's a completely understandable position. And that's the position that they take on all cancellation of debt. If you have a liability that is relieved to you, that represents income to you that you then need to claim on your tax return. COVITRA clarified that if it's related to the CARES Act, we don't have to include that in your income for the year. They also went back and clarified that expenses that you paid with forgiven loan proceeds, right?
you were able to deduct them, right? So now you're getting this double dip. So previously, right, if we forgave you, right, so it's like the SBA or someone else paid those expenses on your behalf. Those aren't your expense. But this program has gotten a lot more generous so that even though you're deducting those expenses and you're getting a reduction in your tax liability because of that, you're not going to be subject to having to report that on your income, right? You're not having to bring that back in. So extremely generous in the ways that this program is working out for most people here. And that was actually a reason why quite a few of my clients, especially ones with weird year ends, I was just telling them, or fiscal year ends, that's what they're called technically, right? I was letting them know that what we need to do is we need to wait, right? So wait, and I hope you did, right? I hope everybody else did too. Just wait on that guidance. It came out just like we expected it to, so we're extremely happy over that. That's it for the PPP. The next thing that they did in COVIDra is they opened up the employee retention tax credit. This is what I like to call the Mike Jones tax credit, right? Because back then we didn't want it, now it's hot and we're all on it, right? Because it is so much better now in its second iteration. So with the ERTC, you could either get PPP or the employee retention credit. In that December 27th law, they've opened it up so now that you can get both, right? You're not precluded from one by taking advantage of the other. And when you do that, it allows for these very unique opportunities for you to go back and adjust your payroll, right? So that's the other thing that I hadn't touched on yet. Most of this stuff, actually all of this stuff, almost all of it, is retroactive. It's retroactive to when the CARES Act was signed. So a lot of these provisions, this part is just wild to me. So a lot of these provisions, right, they're opening it up so that we can go back and refile and amend a lot of this stuff to get funds sent back to us, right, and get this money sent back to us. So anyway, what ended up happening is a lot of people did not take the employee retention credit, right? They opted for the PPP because when you did the math, oftentimes 2.5 times your average monthly payroll came out to be a lot more than what the ERTC was offering. But now that we're able to take advantage of both of them, it makes it much easier. So the COVIDra clarifies that group health plan expenses are considered qualified wages when no other wages are paid to an employee. And these provisions are retroactive to March 27th, 2020, right? So let me explain to you on this page exactly how the ERTC works. It is a fully refundable credit against your payroll that you have paid to yourself and your employee. You essentially get 50 cents on the dollar for the first $10,000 that you paid an employee through 2020, right? So for 2020, $10,000. If you pay an employee, you can potentially get that back, that $5,000 back, right? So you can go through essentially each quarter of 2020 and locate and figure out how much you've paid your people and then apply for those funds back, right? Because they're holding on to your money at this point. And that's what they're telling you. That's the whole idea about both of these acts, right? COVID Relief 1 and 2 is they want you to have funds now, right? They want you to have the cash now. This is the quick injection into the economy that everybody is looking for, but everybody kind of was sleeping on this one, right? So for 2020, 50 cents on the dollar for the first 10,000. For 2021, it increases to 70 cents on the dollar. Okay, 70 cents on the dollar for the first 10,000. And here's the deal. For 2020, that $10,000 limit was annual. So it was only that first 10,000 that you paid over the year. For 2021, we get a quarterly limit. So each time that we pay an employee $10,000, we get that credit, right? And we get the boosted credit. It's 70%. So essentially, it translates to a maximum credit of $14,000 per employee in 2021 and $5,000 in 2020. Very, very interesting there, and it really opens up a lot of opportunities for tax planning here and planning on how you're going to get that money. It's not a free-for-all, right? You can't just go and get the money without respect to everything else that's going on. they do have some rules here. And those rules include, if you go and apply for these funds, you cannot use the ERTC funds or use those to apply for the ERTC funds that you have used to get forgiven, right? Funds that you have forgiven, especially since we can't, or since we're deducting them and not including them in gross income, you have to just make sure these funds do not overlap, right? So again, some very interesting and very fun tax planning opportunities there, right? To just file a document and get money back from the government for stuff that you've already paid for, right? I mean, if you can't, tell how like absolutely crazy I think that is, I do, right? And the reason I'm telling you this, right? The reason I think it's crazy is because that doesn't often happen, right? That's not common in the tax code. And this is, again, even with the newest program, this is such a footnote in the program, right? Most people aren't looking at this, but it's filing a document and you get money back. So I won't harp on that way too hard. The other item that COVID did for us, right? Setting us up in 2021 and 2022 to take advantage of these business meals. So now we have a 100% business meal deduction for meals including carry out, delivery meals, anything of that nature, especially if it's connected to your business, right? We now have a 100% deduction for it. Usually, I advise clients to, if they can, avoid putting their money into meals expenses, right? Because you only get half of it. Now you get to enjoy that full amount. So and if you're eating from home, that makes it even better, right? So it's a very, very flexible and attractive thing to do, right? So if you're going through and you're debating on making that meal purchase, or going out and get XYZ, don't have any fear anymore, because we have our business meals deduction that we can take now. So that is everything. That's everything that I have. Like, so remember, there's so much more. There's so much more that I haven't even touched on yet. And even now, right? There's more stuff that I can go even more in depth on about each of these programs, right? And there's other credits, other business provision credits, like the Family First Coronavirus Act, right? That one, you get a credit, a payroll credit for the sick leave wages that you pay to your employees, right? Those are still around, and those are still very, very helpful. So there's a lot of stuff here, but I just want to make sure that we're highlighting the big ones. As I mentioned before, the information is still coming out, right? Just Friday, they released new information regarding the PPP and these programs. So the information I will continue to update you guys as it comes out and it develops. Obviously, there's a lot of questions here, right, that haven't been answered by their interim final rules, or how we're going to treat certain things. And especially when it comes to forgiveness, right, of the second PPP loan, they really haven't answered a lot on how that's going to exactly work. We know the first one, but the second one still has a lot of questions, and it doesn't look like it's going to be exactly like the first, especially when it comes down to that revenue reduction that we're going to have to prove, right? And exactly what that's going to look like, and especially with, say, startups, right? So startups, as long as they were in force on February 15th, 2020, they could still qualify for that, right? So if they, hypothetically, a business started on February 15th, 2020, they could apply for the first draw loan, and then for the second. But the way that we calculate the payroll costs, right, the expenses, and that even that 24-week period, there's an adjustment that we have to do, and basically prorations. But yeah, you could still do it too if you're there. But they haven't answered a lot of questions on how exactly forgiveness is going to work, and especially for the larger ones above $150,000. At this time, I will open it up for any questions. If anybody has anything to ask about the program or anything that I can help you guys with.
Are we just shouting them out? Can you hear me,
I
JD?
see Richard highlighted.
Richard was asking, how is the low or moderate neighborhoods defined? And how would you go about providing evidence of that?
Okay, so the low to moderate neighborhoods are provided by I forget exactly where it's at, but it's the same map that they use to determine opportunity zones. That map will set out which areas are disadvantaged according to the federal poverty line. I'll have to send it to you. I can look it up and send it to you, exactly that link. And I can include it to everybody so you can see exactly where the low to moderate neighborhoods apply.
Thanks.
Do we have any other questions?
I'm going to assume that this presentation was so good. That's why we don't have any questions, right? I answered every single one right off the
There
top.
we go. There we
Yeah.
go.
It was very dense
You
as
guys-
well. It's very lots of material there. So
Absolutely. It's a very long law. There is about 5,600 pages in this law. Like, my goodness. And the parts for Covitra are split across this law. It is one of the most confusing, and it's just difficult to bring it all together. So yeah, it is very dense. There's a lot of information, but there's so much opportunity here that it just cannot be overlooked.
can I go one more time, not to be rude, but I know you would work with a bank or whatever to do this work, but I'll ask a loaded question perhaps, but are you guys able to offer assistance on, people trying to go through this thing?
Absolutely. So we can help you out and help you figure out how to best apply. Everybody that's on this line, one thing that I'm going to do for you is I will be providing the recording from today. I'll also give you a guide on how I do it, right? So you can go and do it yourself, and a calculator so you can calculate your payroll tax. I want to equip you so you can definitely do it. But if you need me to do it, we are absolutely here to help you out and take the confusion out of that process and help you move forward. Well, I will just take the last few minutes to provide you guys with another announcement. Next week, I will be speaking at the Paragon Partners multifamily unit investors. I'll be speaking about real estate investment and stuff, and also how it relates to the PPP and COVID and Covitra and all that good stuff. So especially if you're in real estate and you want to understand how that works, or even just get an understanding of income tax and the strategies that we use when it comes down to real estate investing, I highly, highly encourage everyone to check that out. If you're on my newsletter, you got it. If you haven't, if you're not, it will be on January 28th at, I believe, 6 p.m. and you can sign up via Meetup. And really quickly, those items that I was talking about, the recording, the checklist, and all of that good stuff, to take advantage of that, please send me an email at info@accoladeaccounting.com, and I'm gonna put it in the chat. Send me an email there and tell me that you want that information, and we'll get it out to you, right? So that way you guys will be equipped and ready to knock this stuff out. But
Also, I
if
see,
there's no other questions,
I see P. Wilson has their hand raised. Did you have a question, P. Wilson?
Okay, I wrote it in the chat. I wanted to know, do you have to be affiliated with the bank that you apply?
you do not have to be affiliated with that bank. And that's what makes this one heck of a program. In my guide, right, I'll give it to you. If you're not able to get it through your bank, there are a plethora of other banks that are more than happy to take your service, right? With these other banks, especially these internet banks, one thing that they do is they aid in helping to shop your loan around. And so in doing so, you're able to find a bank that will take it, right? And oftentimes it is these smaller banks, it is these community banks that are more willing to take on these loans and jump into that process. But it helps to start with one that you have an existing relationship with, because they're not going to need your EIN, they're not going to need your social. You can just kind of just flow right into their system by giving them some updated documents.
Thank you.
Well,
And it looks like Brandy and Kevin might have a question as well. Their hand is raised.
Hey, JD, can you hear me?
I can hear you.
This is Miss B. I have a question. Do you think that these loans will help out? What if you don't have any employees?
Yes, so you do not need to have employees to take advantage of these loans. If you filed a Schedule C on your 2019 or will be filing one on your 2020, you can use those forms to apply for these loans. And you can, I can even give you the formula. On your Schedule C, line 31, net income from self-employment, you just take that number and multiply it times 0.208333.
Okay.
That's how much they'll give you on the loan.
Okay, thank you.
Perfect. So yeah, it's very flexible. And I really hope that everybody takes that away from this program today, or it's meant to be used by everybody, right? And especially small businesses. They want to keep the small businesses alive and in good health, right? And so they're making it easy. And especially if you have that Schedule C, one of the easiest things you'll ever do. It's so easy. There's not all this additional paperwork that you have to provide, unless you're paying payroll, but there's not a ton of additional paperwork that you have to provide. It's just going to be kind of streamlined. As long as you got that Schedule C and you can prove that you were in business on February 15th, 2020, you're good. And your forgiveness is practically attached to that and set. So,
Right. So do we have any
are
other
there any
questions?
other hands up? Okay, perfect. Well, to everybody that joined, I'm so thankful. And everybody on here, I can tell that you guys are the people that will be successful and will make it through this, right? There's just certain people that look for answers and look for ways to help to build their business. Those people are inevitably the ones that it's not always immediate success, but they always find a way. And I know that everybody on this line will find a way today, right, for your business. So 2020 was rough. Keep your head up. 2021, has a lot of promises, and we will definitely see how those are fulfilled throughout the year. I can't tell you guys enough how much I appreciate everybody getting on the line today. I appreciate every one of my clients. Thank you all so much for all the support throughout the years and the help that you've given us. This is really a thing of, I'm invested in you, and I want you to succeed and I want you to do well. And just that support back and that support for you, that kind of teamwork is invaluable, and especially in this day and age, right? So as we go out and about and go out through our day, I hope everybody stays safe. I hope that, we are able to start kicking off a great new tax season. And I hope to see everyone's smiling faces throughout the next couple of months. So thank you all, and you take care.